Welcome to another AriasWave market update. Okay, since my last market update, we've seen a bounce in the stock market. Okay, it's a considerable bounce, and it's after I said that we've seen a bottom in this correction for wave 4. Okay, so I've got it clearly marked now. Now, this would be a wave 4 of 5 waves up since June 2020. Okay, so I've been doing a lot of work on my exact counts for the Dow Jones, and it's become quite clear to me that this is the last move up that's just begun. So where it will go will be interesting to see. Will we have a extended wave 5? Probably so, I would say. Um, One of the rules in AriasWave is if wave 1 is the shortest, wave 5 will tend to be the same length as wave 3. Okay, so that alone probably puts this target towards the top of this trend line, the one that I've got drawn out here. Okay, now to show you my latest count on the Dow Jones, it would be too hard to actually explain it to you in great detail, but I will show you a little bit of it at this point. And that is that we're in wave 5 right now. Okay, so wave 1 started. Actually, the latest count is probably something you haven't seen, and it puts the end of the GFC, or the correction since 2000. It puts it at the end. Sorry, it puts it at this point here. Okay, so it's December 2012, or sorry, about November. Right, so that's a 1, 2, 3, 4, 5. The last wave is in progress. Wave 3 definitely has the strength. On the RSI, it recorded the highest. I think it's the highest RSI in the history of the Dow Jones, well, recorded history anyway. At least on this chart that goes back to the Great Depression. Okay, so interestingly enough, it's wave 3. Okay, wave 5 shows a lot of divergence, and then we went into wave 4 correction. So it's very interesting. This part here, to me, I count as a wave D and E being very small. And it's not the first time that's happened either. So just going really in depth on these waves is just trying to give me some kind of perspective as to what's going on here. Okay. So if you want to go back even further than that, just to see what the deal is with this whole move, I've actually changed a little bit the count. And what it suggests is that the Great Depression highs of 1929, or before the Great Depression, was actually the start of a massive move to the upside. Wave 1 basically ended at that point with a leading pattern. Okay, it was a weak 5 wave move. Now that doesn't surprise me, given that that was basically since the formation, or during the formation, of the USA. So to me, this will still remain as a wave A, and then wave B is a type 2 expanded zigzag that went up all the way to 1987, and then we saw a wave C. So what I'm trying to say here is that we're in a wave 2, and this is not going to stop. Ladies and gentlemen, this is probably going to continue in the long term to the upside, and I don't think there's anything that can be done about it, simply because money printing is not going to stop in our lifetime. Okay, and I think that's the whole purpose of, measuring inflation compared to other commodities and other forms of assets, especially when you're talking about fiat, the US dollar, and other you know, other currencies is basically a devaluation of that fiat and an increase in the prices of, well, everything in the long run, goods and services, assets. Hyperinflation is probably around the corner. But before we get to hyperinflation, I do believe that we're going to see a massive crash back to the mean, reverting to the mean in what I could only suggest is going to be like a really sharp, deep crash. And the reason I say that is because of the wave that it's going to produce. It's going to be a wave E, right? So wave E's are the waves that happen before any major move, especially a wave three. And in this case, it would be a long-term, extremely hyperinflationary wave three to the upside. So reverting back to the mean will mean quite a substantial correction. However, I don't think that it's going to return back to the end of wave one, which would be just considered a type one correction. But I do believe that it will be a type two correction, considering that wave E will probably end way above the area of 1929, right? And that was around 1,620 on the Dow Jones. Whereas we might come back even close to that would be 3,000, 4,000, 5,000, 6,000. There's no telling where this correction will fall in the future. Okay. But in terms of where we are now, I think that's the critical component. So, what does this mean? Why am I telling you this? Why is it important? Well, it actually says a lot about what's going to happen after this crash. It means that we're going to go up in a big way. So that is something that helps sort of predict future prices after the crash. Okay. Now, in saying that, I do believe also that the crash won't last that long in terms of when will price come back to the highs again after the crash. Well, given that it's going to be a wave three, I think that they're going to step on that accelerator and increase money printing dramatically. So that's the part there that to me is going to signal probably the start of a just it could be hyperinflationary, but whatever it is, it's going to be big. So for me, the most important thing in this whole picture is cryptos, because cryptos will provide a way for people to hedge themselves against the craziness that's coming in a big way. So that's still in progress. There's still time for that. There's still time to buy and sell and buy again for cryptos. So that could definitely mean a lot in the future, especially if you want to try to protect yourself against that kind of inflation that's coming, which is going to be bigger than any moves that we've ever seen, ever before. It's going to be huge. That's not necessarily a good thing. It can be a bad thing as well, but for the purpose of this video, we just care about the waves. So let's move on. Okay, so as I mentioned before, going back to the US 30 chart, now this is a market update, so I will just go through a couple of these things quickly and then move on to the next chart. So at the lows here, so basically since the highs, we have a very similar pattern as I mentioned uh, to what I mentioned in Bitcoin, where we had a complete correction occur in the one wave, right? So it's a complete correction. It looks like a zigzag, but it's not a zigzag. Okay, we all know AriasWave, or you should know by now, AriasWave is not Elliott wave. There is a difference, especially when it comes to corrections and how they unfold. Okay, the same waves will always be found in a correction according to AriasWave, but Elliott wave, there could be a number of variations. Now, the only thing that varies in AriasWave is just basically the shape of the move. If you find the waves included, then you can basically see that there's something else going on and it's not just randomness. It can be read if you decide to try and read it. So here we have what looks like a complete correction with a bounce to break the previous wave 4 of wave E. And that's been happening recently. I don't think that this is going to go back down. Since I called it, it's gone up. And now we're just correcting at the area of the previous wave 4. And I think once we do that, we'll begin to move higher. And as you can see, the RSI has retested the lows and it's getting ready to go back up. And it could go back up in a big way, as I mentioned earlier. So, what's on the other side of this is the euro. So, the euro to me is another piece of evidence to be used here. Like, for example, if the euro moves up, then we likely get the markets moving up as well, cryptos and the stock market. Now, because we're in an interesting phase of uh, these moves, you can see that down the bottom here, we had a move up in the euro, which also was around the same time. That, yeah, basically it's the same thing that's happening in the stock market. So, how far will this bounce? Well, if it bounces above the red line, then it's going to nullify this view. And I have a different view in case you're interested. However, I do believe that we're just going to correct in just price action that's going to go within this area here, right? And we're going to see movements that basically prepare us for the move lower, as I've been mentioning before. And that's going to coincide with the move down, the crash that I see coming, but it's not going to happen yet, right? I don't believe it's going to happen yet. I think it's getting ready to happen, but there's still some more upside. So what does that mean? Euro going up? Well, markets will go up. Also, probably not in a very strong way. There's probably not going to be a lot of strength. Wave fives are typically weaker waves, right? Especially on the RSI. So a final move up could definitely be something that people could eventually, realize is happening, and then they could pile in. But really, it was just all about FOMO, and FOMOing at the top is good if you do it early. If you do it late, then you'll probably sell at a loss, or you'll probably just lose, quite a bit of money. So at this point in time, that's a big key component here. Now, I'm not going to touch on interest rates at the moment because I believe I can leave that for the next video. But if we go to Bitcoin, right, as mentioned in the previous update on cryptos, same things going on here. We're looking for a wave 5, okay, a wave 5 up to complete the move up in Bitcoin, which could go into the hundreds of 100,000, 120,000, somewhere around there, right? And it's going to be the end of this cycle before we get that crash, which should affect Bitcoin as well. If you want to see that video, I'll link it below. Very interesting things indeed are going on here. So a lot of pessimism going on in the markets. A lot of, you know, big players, bankers are saying there's a hurricane ahead. There's hell is coming and all this sort of stuff. Well, that could be true, but at the same time, they're probably going to be buying the last dip up anyway. So it's almost interesting the way that the media explains things to people, because when has the media ever helped you make money, right? So it wouldn't surprise me if on one side they're saying sell and then they're buying right up until the final point where it is a sell, and they're, people will probably FOMO in. It'll be the new paradigm. People will definitely get interested because it's going up and up and up, and then it'll turn lower, probably faster than you think. Probably won't give people enough time to get out, or they may just think it's another dip followed by another bounce. So that's interesting to me. I think that's great. Now, with Bitcoin, that's fine. That's a 5 wave move completed since the inception of Bitcoin, since the beginning. But when we're talking about XLM, right, it's an interesting story because of, well, the STR chart. I'll just go to the STR chart quickly and I'll mention that is the moves since the beginning have given some kind of indication of the coming price action. It's going to fit in with that idea that the stock market has one more high, Bitcoin has one more high. However, XLM could definitely outperform both of them in terms of percentage. So for me, From these lows, I believe we're going to start seeing a move up to $15 at a minimum. It could be less, it could be more, nobody knows. But given that the pattern is most likely a zigzag pattern that is beginning to lose its strength in the correction and finish the correction, then we're just looking for that move up. So that there is pretty interesting stuff. If you want to, you know, if you're a bit optimistic still, then there's probably hope for you. Um, but yeah, just like I said before, when people tell you to sell or tell you that bad things are happening, most likely they're buying the dip anyway. So it's probably not something to worry about at this stage. On XLM, just at a small degree, because I've been tracking this quite a bit. Okay, we had a break of the highs, the mini highs here, wave one, A, B, C, D, E. And then we had a break of wave E. We went up here, and then I just put this little channel here, right, from that high to the C wave low. And I looked at the 50%. After it went up, it came back and it's now around that 50% area. So I can see like a mini 1, 2, right? So it's basically like 1, 2, and we have like oops, hang on. Okay, so we have like a 1 and then 2 to here, and then we have like a mini wave 2 there, and I believe this is just going to keep going higher and higher and higher. So obviously that's still in progress. So let's just continue to observe that, and I'll come up with another update shortly. So those two right now are the key components for me. There is a bit more that I could talk about on other charts. However, I just want to keep this short, well, as short as I can. It's already 17 minutes. But I think those are the important things to see right now is, you know, basically evidence to support that we're not going lower yet. We probably will see another high. Okay, I think that's the most critical thing for people right now to understand. If you can wrap your head around the analysis. If you want to learn more, head over to my website and you can actually learn AriasWave if you're, keen on understanding what this is and how it works. Um, AriasWave is definitely a very good objective methodology. It The only thing that's really hard about, and it may not be for you, right? But it's really hard to identify the waves because waves are not always easy to identify. Even if you have the best methodology, it all comes down to the analyst and how you see the waves. I basically try to give you my interpretation of AriasWave, the methodology, and teach it as well. So hopefully you've found this video interesting and informative. Thank you for watching.